Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, February 16th, 2018. Quick reminder, I'll be leaving town this afternoon, right around lunchtime, a little afterwards, maybe around 1 o'clock Eastern. So I'll be in the trading room up until then. If you have any questions, want a chart opinion, just drop me a line. And otherwise, keep in mind the markets are closed Monday for President's Day, so we're going to be looking at a 3-day weekend, so just take that into consideration. As an active trader, whatever you bring home over the weekend, you have an extra day. Instead of two, you have 3 days of what we call overnight risk. But again, longer term, if you're a regular swing trader, trend trader, I'm going to just update all the trade ideas here, give you my thoughts on each one, and wrap this video up. This is XLE. XLE, has been, I mean, it's been a great year so far. We're off to a phenomenal start. The, vast majority of the trades have been successful. XLE, we had as an official short trade here. We shorted, I forget exactly where, somewhere up here off the divergent high, swung it down, hit our price target, and then we picked it up here. We closed out. Picked up here after the divergent low, somewhere on along here. Again, I don't know where the entry, I don't have it in front of me, but we hit our first target. And since then, the reason I have multiple targets, and this is always, you can find this in the FAQ page, why I list multiple targets. Uh, you know, um, Several reasons, but as you can see here, one of the things is each target's where I expect a reaction. That's exactly what's happened. XLE popped up, hit this first target. It's been consolidating around, and that's fine. That's healthy price action. If you watched my video earlier this morning, I am looking for a possible, some downside, maybe some sideways action in the broad markets. That doesn't have to happen. I mentioned closing out most, but not all of my index longs yesterday because I think, over in the coming weeks here, I think there's more upside. I'm just looking very near term. And also, what I do is a function of, what's going on with me. I'm not going to be in front of the computer the second half of today, plus heading into a 3-day weekend. So, especially on my trading account, I went flat. So here's XLE, and again, looks fine for now. This consolidation's healthy. Any pullbacks you could recycle back in. I think any pullback down here at about the 67 level would provide another objective entry. Um, but keep in mind, it's this trend indicator. One thing I'd like to see, I look at these 60-minute charts, which we're looking at here. And by the way, if I don't mention it, here's the time frame we're looking at up here on each trade, and here's the ticker symbol, or you can see it back there in the middle of the screen. Um, so one of the things that I like to look at is the 9 EMA on multiple time frames, particularly the 60-minute chart and the daily chart. When that 9 EMA of the PPO, which is the signal line, the white line here, when it's above the zero line, this dotted line, the trend is bullish, and when it's below, it's bearish. So right now we are at we're testing, and the PPO appears to be rolling over. So I wouldn't add to XLE right now, even though we've consolidated there. Number one, we're still a hair under resistance. That line right there, the target was set just below, but that line is resistance. Even though we overshot it a couple times on briefly intraday, we keep closing below it. So you have XLE at resistance with this trend indicator still bearish, although we're coming off a divergent low. And again, I wouldn't leave it on as a long trade idea with this as the final target if I didn't think it had a good chance of hitting it before the stop is run. So I just would hold off on that. Maybe wait till next week, see what happens on Tuesday, and maybe we get a chance to buy. Or later today, maybe you get a dip and you can buy back in. All right. So next one up is just going through these. I'll go through these in reverse order of how they're listed on the site. I'm under the trade ideas under active trades, both long and shorts. UGA, this is the only one. This has been so far. We're 0 for 2 this year, but we had some excellent trades. I had just a field day trading this one in December, January, both long and short. I was trading actually in some accounts this my trading account where I trade futures using NG. So far, it triggered right after I posted it, barely hit the buy trigger. In hindsight, I should have just waited, like I said before. I did a video the night before this 55.41 level, as well as that downtrend line on natural gas futures. Maybe we'll look at those. It hasn't taken that out yet, nor has it taken out our stop. It's come close, but we need to cross below 5160, which would be any print of 5159. Now, personally, I'm going to give this one a little room. I'm going to lower my stop a little more before we leave town. Let me look at natural gas futures for you real quick. Here's nat gas futures, the March contracts. There's the divergent low. The case for this one was, um, there was a case to be made for a long back here, the seasonality I talked about, then the fade of that rally. We have positive divergence in place that continues to build. This one just needs to giddy up and go, and it hasn't done so yet. I was looking for a break of this trend line. Now we limped through that trend line just slightly. Um, Prices are holding this level, so we still have positive divergence. Prices are making equal lows here while the indicators are pointing higher. Uh, but if we break that level, and I can see this happening because there's a very, very good support level just below here, about 2 4 on the March contracts. That's at 2459, $2.45.9. So that's a possibility there, and that would be at this point in time my max downside expectation for nat gas before a decent rally. So do what you want with it. I'm going to leave the official stop as is. If they take us out, no big deal. We can always re-enter it again. So that's UGAS, which is the proxy we're using for this trade, because I imagine a lot of traders on the site don't have futures accounts or the experience to trade futures contracts. Here's SPY, the only index long official trade idea that we have. That first target's already been hit. I haven't noted it there, but there was an update made on the site. Again, I shared my thoughts in detail on the broad markets today. I'm just booked some profits myself yesterday for the reasons I mentioned in the video today. So if we continue on, it's still, I wouldn't leave this trade on if I didn't think these additional targets had a good chance of being hit. But we may get some consolidation. We're getting a little stretched, and we're at some at or near some key fib levels. Again, check out that video. It was only a brief 10-minute video on the broad markets today if you haven't seen that, and that expands on my thoughts on SPY. SOXX. I made it very clear both in the video before this target, right before around the time this target was hit, as well as when it was hit. It's the one short I left on, but I made clear that I covered at these lows. I told you I expected a reaction, a considerable bounce there. I even went long, reversed it, closed out that bounce trade. So in other words, we shorted right off the highs, literally one day within a percent or so off the highs, swung it down, hit that first target. And again, I felt strong that we'd have at least a decent bounce because when we hit that target, that coincided with that bottom in the markets that I was looking for and made the case for. So when you can make a case that the stock market's going to bounce, um, obviously a sector, especially one of the biggest components of the tech sector, which are the semis, they're going to bounce as well. You're not going to see the market bounce and not see the semis bounce with it. We had a 12, what was it I covered today off the futures on the QQ on the Nasdaq 100 futures. I think it was like 11 plus percent bounce off the lows. So obviously that's going to bring the semis up with it. Now, so I also stated longer term swing traders, if you're not an active trader, I think it still looks good. Our stop is way up here. You can lower the stop now if you want to entry. There's no that probably wouldn't be a bad idea. Now I'm going to leave it on here because on this one I'm as far as swing and trend traders, I'm looking at the bigger picture. And so all that we've done so far is broken down from these multi-year uptrend lines. This trend line here goes to the left of the chart. It's like a 2-year trend line, and we've come in. We made a back test. Now we back tested yesterday, or close to it. Today we're back testing. The thing about back tests, they can continue for a while. We might also pop up above that trend line, especially intraday. But I still like this one longer term. So again, define your time frame, your time horizon. That is, and if you're a longer term trader, I do think this one will continue on down and hit these other targets, or I would have booked, closed the trade out there officially. So there's SOX. Still looks good, but like I said, when we hit that target, there was a very good chance you were going to have to ride out some give backs if you didn't book profits there. And I did post an update in the trading room yesterday. My plan was, and I said at the time when I covered there, that I plan to reshort it. Um, In a vacuum, I would reshort here on a back test, but I don't trade in a vacuum. I look at the broad markets, and I'm not convinced enough that the bounce in the broad markets is over. Therefore, I'm holding off to have a stronger conviction that the bounce in the broad markets is over before I add back a short on the stocks. I don't want to swim against the tide on this one, and that's the only short trade on the site, and has been for the last week or so. JJG grains still looking good, guys. I really like this trade. As well as some of the other ag commodities I mentioned for several reasons. Number one, as I stated before, these aren't get rich quick. You're not. Sometimes you can see some pretty sharp gains. Oh gosh, I just moved that trend line. Didn't mean to do that. I tried to measure for you. Back here, you had a 15% pop in short order. Here you had a big drop. But for the most part, grains, things like that are steady Eddie performers. But what I like about it, particularly now, my thoughts remain that we're in the ninth inning of a bull market. Um, I can certainly see the possibility of new highs in the market going higher this year, but I think we're going to see more corrections. I think the correction that we just had will not be the biggest drop this year. We're going to see volatility. That's a given. The VIX is that whole volatility short trade has been broken. And where I'm going with all this is whether you're a swing trader or an investor. My background back for my former life, I was a financial advisor, and one thing we talk about is, asset allocation and diversification. And so when I use those same concepts in my long-term investment accounts, 401ks, IRAs, things like that, as I do in my trading account, and that is diversification, not just amongst different stocks. You can have 10, 12 positions, but if they're all tech stocks or tech related, they're going to move in concert with one another. Grains or commodities are a completely separate asset class. There's almost no correlation to the stock market, as is gold, as are bonds. So that's a way to build a portfolio. And right now, if you've noticed, the trade ideas on the site, we do have that diversification. So we have a lot of long exposure on the stock market, different sectors, individual stocks, but we also have a bond ETF, which I'll get to in a second. IEF is a long trade idea. We have commodities I mentioned, and that one's already hit the first target. Still looks good up to T2. Let's not spend any more time on that. It looks fine right now. Big divergent low. I told you I also like this one. Not as much. That's why it's not an official trade idea, but DBA is another agricultural ETF with various ag commodities in there, and that one looks good up to about this 1950ish area at least. And I see the potential for a more lasting bottom. Commodities have been in a vicious bear market, and again, there's commodities are not created equal. There's ag commodities. Even within agricultural commodities, you have, coffee and soybeans have very little, if any, relationship. So, we'll selectively try to navigate, but an ongoing theme that I plan to have on the site going forward in 2018 plus is, exposure to various commodities, whether hard or soft commodities, agricultural, there's timber, there's all types of stuff out there, and we may go short some of those commodities. And in fact, I can almost assure you we will. But as of now, that's what we're long JJG, and it looks good. Moving down the line, I just mentioned IEF. I still like it. And again, this is not a get rich quick. This is an intermediate term bond fund. You want a little more beta, you go to TLT, which is the 20 to 30 year treasury bonds. But I picked IEF. I think as I said, the case was already made for that. I think the sell off in bonds and as well as REITs. I've also mentioned being bullish on REITs and utilities recently. I think the selling on those rate sensitive assets such as bonds, REITs, utilities, I think it was overdone. I think they fully priced in and then some any near term rate hikes that the Fed is most likely to do. And so that's it. This one, we have a way to go. It really hasn't reversed yet, but you can see the big divergences building. So I do like this. And again, it's also good for those that are a little more risk adverse or are looking for some diversification in your portfolio. If you've had a 401k or any type of long-term funds and you've ridden this wave up in the stock market, to this point, and you want to start at least diversifying, taking some off the table on the equity side. There, I think at least for the near term, there's a trade to be made in bonds, and at the very least, your downside's minimal. They've already had a heck of a correction. They don't move that much relative to stocks, and you get paid to wait. Of course, there's the bonds kick out interest. Not a whole lot on treasuries, but they're safe. GE, General Electric, looks good. Big divergent low. We talked about this one for a long time, but I never added it as an official trade idea. This was a bear flag back here, and that bear flag played out. It had a consolidation range. It looked like it was going to take off here when it broke out. I took a position, took a hit on that one, but I'm back in it now, and I really like it. I see nice. You can see the PPO turning up here, about to confirm this bullish divergence. 60-minute chart. This is where we base the trade off of, or at least the targets. Of course, the trade was based off what I saw on the daily chart as well, and I put that up. But you can see we've taken out, I had two alternative trend lines, this being the primary and this an alternative trend line. We've taken that out. It hasn't really started to run yet, but I do expect it to. And if it doesn't pan out like any other trade, let it go. Don't get married to it. Don't get married to anything in this market. Um, I stop. I don't have it in front of me here on this chart, but these are the price targets now for GE. And so if it hits that second target, you're looking at a gain of about 15%. Not bad. So imagine the success or failure of this trade will have a lot to do with what the broad markets do going forward. ENDP still on. ENDP. Story on this one. This has been on for a while. We caught this one, gosh, where was it? Must have been down here, somewhere, yeah, probably right down here off the lows. We hit our first target, then we went on to hit our second target. I'm sorry, we reversed just basis points. I think it was less than a percent or so shy of that second target at 912. Yeah, we hit a high of 902, so close, but it's still above the stop, and it still looks good. I think the selling is overdone on the generic drug makers. I've cited the reasons so that we got knocked down here. Weekly chart, I made a note to see the weekly chart. Looks good. Still, this looks very good, working its way down. If it takes out this weekly trend line, there's a potential for a much larger swing trade on this one, all the way up there to that $14 level. So, if this old bull market has some life in it, and continues to make new highs and go much higher throughout 2018. And remember, that doesn't have to happen. There are always certain stocks and certain assets classes that rise in a bear market. So it is possible that the U.S. markets top in 2018, and this one goes on to hit that target. But it would obviously give it some tailwinds to see the broad markets continue up. So that's a longer term picture. I just want to let you know I still like that one. And corn. Corn is another one. We've had this one on for quite a while. R1, that means resistance one or first resistance level. We were somewhere down here. We caught this one right off the lows. And again, I just changed the stop by mistake. I'll have to fix that and grab that line. It's one thing I hate about this GC 2000 charting program. If you try to use your measuring tool and you get too close to a trend line, you grab it and it moves. I was trying to give you the percentage, but it looks good. Looks good up to this first target. And remember, I've said it when I added JJG, corn is a component. There's only three grains in JJG: corn, soybeans, and wheat. So they all look good, but just keep in mind, whatever you trade, understand if it's an ETN or an ETF, understand what's in that ETN or ETF, and make sure that you're not overlapping and have too much exposure to any one sector. Finally, as far as active trades, AOBC still looks good. Strong divergent low. I made note when I put this one on. It reports soon in a few weeks here, about 3 weeks. Earnings are on March 8th, but I like the chart on this one. I like it as a bottoming play. And so far, we've managed to just barely avoid. Actually, I might have added there after the stop. Either way, it hasn't been stopped out, and it still looks good up to this first target. Maybe get a reaction there, maybe not, because earnings could has the potential to gap this one up above there. So these are the targets, and again, I still like it. Not much more to add. Just have to be a little patient with that one. All right, so that wraps up all the active trades. I know there's always interest in GDX. Whether I'm doing active analysis or trading it or not, seems to be probably over the years, the most popular trading vehicle out there. Even more so than the broad market ETFs. I field more questions on this. I'll give you an update. This was the recent trade. We hit our first target, boom, hit our second target, and this is, why I set final targets. That's final targets are set at the point where I either believe that the risk reward is no longer favorable to remain long, or I expect a reversal of the trend. In this case, I can tell you I can certainly see, and I made the case. I did an extensive video on gold. I can see the possibility of, for a lot more upside in the gold mining stocks and gold. Um, in the coming months to year plus. However, very near term, and so far you can see that the top of that resistance zone has capped all the advances. So that's why I'd rather just get out, move on to the next one, not have to. The only thing worse than losing money, being stopped out of a trade to me, is getting caught in an extended sideways grind, meaning being in a trade that just grinds around sideways. As a swing trader, there's a term I've used on the site before. I call it velocity. Velocity meaning get out. If I get in like this trade, what did we get on? A 6.4% gain on GDX, and I was trading nuggets, so I was better than that. And that was hitting just 2 days. So you get in, get out, make 20% on Nugget, turn around, you have that cash on hand to deploy into the next trade. Maybe that next trade will be a long if GDX pulls back to where I like to see it. Maybe it breaks out and looks good. Or maybe I deploy that cash elsewhere. But if you can get 20% or even 6%, 7, whatever we got, if you did just GDX, you get that in 2 days. Um, Turn around, even if you have to sit, and that's the key to trading is to not overtrade. If you have to sit on your hands for a month to wait or 2 months for the next best setup, next good setup, think about it. If you did 6% every 2 months, you're still going to outperform the market by a vast margin. So that's the key, and that's it. So I don't know where it's going near term now, guys. That's all I can tell you right now. I just that's where the final target was, and I've been getting some questions on that. Longer term, sure, yeah, divergent low, everything I point out that makes a case for a, you know, uh, longer term move. But I told you before when I did the last video on gold, I had a resistance zone right here. We reversed off that to the penny. We hit it 3 times. This is when I did the analysis. I said gold is going to come here. We have I'm sorry, support zone. But then I could see the potential for a move back down here, and that's still very much in the cards. We had a divergent high right here, big negative divergence, just like we had back here. Again, I don't want to spend too much time since I covered this extensively. So I cannot rule out the possibility of a move down to this target I was talking about here. It's a very, very well defined support level. And if we got that and the chart's confirmed, I would be very interested in putting into a long-term position on the miners. So right now, caution is the word I'd like to use that I have. Maybe that was it for the pullback in gold. Maybe, maybe not. So we'll just see what happens. Again, I'll follow up with some updates on gold and the miners next week. All right, we'll just wrap it up. This one again, we closed this one out, but this was another just a huge trade this year, this overstock. We actually had two different shorts on this one. One was in December, or was it late last year? We hit it, we shorted overstock, yeah, back in November, the end of November, close out for an 18% gain. And then this most recent trade, we hit it for a 44% profit. So we shorted right off the highs. This is another, beautiful, beautiful example of technical analysis. We were short at the highs. That stock got cut in half. That was a target identified. That at the day the trade was added, we hit it to the almost to the penny reverse. And this is a good example of why that final target. This was where I set a target where I thought the pullback would end, and it had a lot to do with the daily chart. You can see I had a support, very solid support line. There's a big gap, 48.18 it shows there, but this level here was 48.19 or so. And as I often talk about, I always set on short trades, my price targets are set above the actual support level. because when you have a very well-defined support level, as you did here, a lot of eyes are watching it. And what will happen very often is, especially after a 50% drop, you're going to have a lot of buyers step in. So, in hindsight, I probably should have reversed this as an official trade or even taken it personally. But either way, we did a great job on that one. So it's been we're off to a big start this year, and I plan to keep that going. Now, part of that is the thing I said earlier about over trading. So, if going forward for the next week or two or a couple, even month or so here, I'm not going to force trades. If I don't see any clear objective setups or entries, the trade ideas may become light again as they were, towards the end of last year. But then we really spiked up, had a lot of short trades as we were heading into the year. So, we did very well in January and February so far, and hope to keep that streak going. So we'll wrap it up here. Again, I'll be out, later this afternoon. Markets are closed on Monday, and if you guys have any questions or want a chart opinion, shoot it to me in the trading room today. I'll get back to you before I leave. Have a great 3-day weekend.